Day trading futures attracts a lot of different types of people, and they all share one thing in common. They want to be successful. And when that drive to succeed is strong and you are armed with a winning trading strategy, why do so many still fail at it? So what is the difference between traders that succeed and those that don't? Now, there's no one right answer, but there are a few elements that work against us as traders, and that includes emotions. Failure to learn to control your emotions when you're faced with losses, your gains, luck, and indecision, and that leads to poor decision making if you cannot control your emotions. Timing. Now, market timing is a factor that you have to master to become successful, and this is where a lot of traders fail. Capital. Being undercapitalized or having external pressures to make money. In this kind of situation, traders often feel that the market must produce regular and consistent profits for them, or they're going to be put into a financial bind. And all of this introduces trade psychology issues, and it sets a trader up for failure. What about those that are seeking the golden system? Well, failure to stick to one trading system is a problem. Most traders will take a few losses, and then they'll try to change things, they'll tweak things, and then ultimately they're going to just find something else. So they jump from one system to the next without ever really learning the system's rules and method. They think that they can find a no-fail trading system right away before they give the day trading system that they're using a real trial. Now, the problem with this is that there are zero no-fail trade systems out there. And unless you really learn the system that you have, you're never really going to find success anyhow. And before I go on, it really does help to understand how markets move. And I put together a free ebook that you can download. The link is in the description below, and it's up in the right corner of this video. And it teaches you how to trade certain price patterns. And really, you can put your own trading strategy together from this information. All right, so how many of these that we just talked about have really come up in your own trading? Personally, I'm probably guilty of making all of these at one point or another in my trading career. So let's focus on how we can take strategies that have an edge, avoid these issues, and then come up with a plan and a trading strategy to help develop into a successful day trader. And now you may have heard some of this before. And maybe this time it's going to sink in. Who knows? Maybe go ahead and tell yourself, you know, this time I'm going to apply what I hear and what I learn. So why do you often hear the same things over and over again? Because there is no magic secret to winning at futures trading, period. Nobody is hiding that pot of gold from you. So let's get started. You need a market to trade. So first, pick a market that you like or you're familiar with. Now keep in mind that it has to suit your trading style. You need to make sure that you have enough capital to trade that market. If you have a $5,000 account, you probably don't want to start trading the ES or crude oil, since they are beyond the 2% risk per trade on that size of account, just because of the way those markets move. The NQ or the Dow, they have a smaller risk per point, so you and your trading account can handle a few losses without putting you on that emotional roller coaster. And you could also consider Forex as well. Now, your trading plan. So you have your market, now you have to create a plan. And if you don't want to create a plan from scratch, we have a few resources at Netpicks that can help you out. And all of our systems, they come with complete trading plans, so most of the hard work's already done for you. You're going to need to test this trade plan for yourself. But some of the work can be eliminated if you choose to go with something that you know works for others. Right? It's best to backtest that plan for about 6 months. And backtesting, it's not flawless, but it's going to give you anticipated results, so you know what to expect when you start to trade. And I've linked up a great video on backtesting on the right here, so you can learn more about that as well. And it's important to know how many wins and losses in a row your market's going to give you, so that you can be prepared mentally and emotionally to trade it. Now you have to learn to manage your positions. And learning to manage your trading positions on the platform you'll be trading live. This way, you can make certain tweaks, such as perfecting how you're going to trail your stop. So remember your trade plan and don't deviate from that. And if you can execute 25 trades in a row with no errors, then you might be ready to trade live. Now notice I didn't say 25 trades without losses. No, I said 25 trades with no errors, because you're going to have losses. They're a part of trading, so you have to expect them and get used to them. And this is going to build your confidence. It's going to strengthen your emotions, and it's going to show you that the system that you have works or doesn't work. So you can see from just these 3 steps, I covered all of the issues that we started off this video with. Now, live trading. And this is where you put your trading prep to the test in the live market. And this will give you the feel of the market. You're going to see how fast it moves and how it responds to news. And you're going to make mistakes, but you can't let them stop you. You have to learn from each one of them. Using a trading journal after each trade, you can look at your results and your emotions as you were trading. Did you skip a trade because you did not feel good about it, or that you expected the market to go the other way? Now, you can skip a trade if it falls into the parameters of a filter in your trade plan. But if it doesn't, you know that moving forward, this is an issue that you're going to need to work on if you're skipping trades. And if you find yourself making way too many mistakes, then you have to stop trading and reevaluate what you're doing wrong and why you're doing it. So here's a quick breakdown. You got to have a plan. You have to back test your market and then practice it until you have it down cold. And you use that plan and you back test the data to help get your emotions and your psyche under control. Because if you know what to expect from your trading, the actual trading will be a little bit easier and much less emotional. Keep your risk low. Don't use too much margin, and this will keep you in the game. You'll be able to take that next trade after a few losses to come back positive, or at least close to it. And test your system. Know the win percentage. Prove to yourself that it works before you risk any money on it. Okay, it's not easy, but the steps are pretty simple. You just have to commit to doing it. And in doing so, maybe being a successful trader, your goal is one thing that you'll accomplish. Thanks for watching.